Good afternoon, people. My name is Puneet Jain from Jain Matrix Investments. And for the next few minutes, I'm going to talk to you about why you should invest in the Indian stock markets. The first major reason I'd like to point out is that in India, the penetration of stock markets, that is investors who are into the stock markets, is just 2%. In America and other developed markets, it's as high as 40 or 45%. So basically it means that in India, if you are in the stock markets, you're early into the asset class at a time before it becomes widely popular, and so you can get unusually high returns from this asset class if you venture into the stock markets these days. The second point that I'd like to point out, some of the changes that have taken place in India in recent times include the demonetization which has happened in November, December last year, as well as an extra thrust on tax collections by the Indian government. Now, all of us have seen some changes in our financial behavior, and chances are that your bank account now has much more of your assets than it had in the past. Now, how do you deploy these assets in your bank account in a way that gives you better returns over the longer run? The option of stock market is very exciting because it gives you an instant ability to invest when you find the right opportunities, as well as liquidity that you can come out of the stock markets when you do need the money at a future date. And if you invest with the right approach and the right attitude in the stock markets, then you will be able to build a wonderful asset class and take advantage of this asset class in terms of your personal investments. Now, when we talk about asset classes, there are several options that you have. For example, you could invest in the real estate, such as land, apartments, or office buildings. You could also invest in gold, either directly physical or in gold ETFs or jewelry. In this slide, we try to compare the various asset classes, and we can see that although it has the highest risk, direct equity also gives the highest returns, and we can see all the other asset classes. You could also invest in other asset classes such as fixed deposits or even mutual funds. But direct investments in the stock market stands out as both, perhaps, as you would say, the highest risk as well as the highest potential returns. Even the Sensex and Nifty over the last 15 years have grown at an average of 13 to 14% per year compounded, while real estate as an asset class is a much lower returns, around 10%. And fixed deposits are currently between 7 and 8% returns per year. So there are several advantages in being in the stock markets as an asset class. Another interesting perspective that I'd like to bring in terms of your investments is that we are seeing India change at a rapid pace in the past few years. The reason for that is there are a series of new companies coming in, whether they are multinationals or new initiatives by Indian companies or new entrepreneurs in India setting up in India. And so the changes are being brought about by entrepreneurs, many of whom have listed companies and who are setting up successful businesses. Now, you can be part of this as a consumer if the products are attractive. Why not be part of this as a shareholder or as an owner of the business, where you find the right entrepreneur, invest in his business, let your money work for you, and watch the talented entrepreneurs grow your assets for you. So you could be part of the changes taking place on the ground in India by investing in the stock market. That's all that I'd like to tell you today. Thank you very much for listening in. Puneet Jain from Jain Matrix Investments.